Hello, everybody. It's Sunday. It's Q&A time. Thank you all for being here. It's just me and T&D Tesla here. So gather questions. So please don't super chat me at the very, very end. When I wrap up, I'll take a couple of questions, but they'll just be freebies. So I don't want anybody to super chat anything and then us not be able to see it. So thank you so much. Let's go. We have a lot of stuff to talk about today. And again, this is the top questions from the week from the Patreon community. We're going to talk about KYC-free peer-to-peer Bitcoin trading. How do you do it? Well, it's possible. We're going to talk about Bitcoin cycles. We're going to talk about dollar cost averaging on steroids versus top and bottom indicators and how you can use indicators together. Thank you, KN. I did see that. We're going to talk about inheritance game plans. Interesting one. Somebody posed me a tough question. A little look at this TeraWULF, this miner. Real brief. We're going to look at the Constellation DAG. A lot of people are very interested in that. MultiverseX, which is a silly name, but that's Elrond, as we know it in the past, an update. We'll look at some Compendium scores and some SCP scores as well. And a whole bunch more. We're going to look at Bitcoin cycles too. But let's just jump in. Did I cover everything? Oh yeah, daily active users versus new addresses. And is there a correlation there? Oh, by the way, I just see here, Ethereum is now back at May 2022 levels. Why is that significant? Well, that's right before the proverbial hit the fan, if you guys remember. So Ethereum just shot up to 2140. Big move. Let's see exactly what else is happening here. I'm sure Bitcoin's moving too. No, big at 30,550, went up $200, $300. And the top performer of the day will remain nameless, but from my short list of 100 cryptos. Let's jump in. This is, of course, never financial advice, just edutainment and what I would honestly, openly, and transparently do myself. All the questions come from Patreon. We still have some seats available if anyone wants to jump in. And thank you so much, the existing community. I love working with you every day. So let's talk about Bitcoin cycles first. This is a question from CPK 2001. With the scarcity of Bitcoin increasing, do you anticipate a normal 4-year cycle where the price goes to all-time high and then a major correction? I have a hard time getting my arms around a correction when something is so scarce. Thanks, love to animals. Thank you so much, CPK. Great question. So I don't have a crystal ball, but let me share some data points that I think are quite relevant as to where we are, where we could be going. And we have seen, there was actually a week last week where I think for some reason, nobody that had held Bitcoin for like the previous 2 weeks actually sold. It was just pure accumulation. We're talking like 99.7% of Bitcoin was just hodled. And that's the first time I ever saw that. So people are waking up to the fact that yes, it is darn scarce. And it's getting scarcer. But let me show you some exciting data points. This thing is just getting harder and harder by the day, and that hardness is going to double real soon. Let's look at adoption first. This is actually from the top and bottom indicator. And you can see we're at 46 million addresses, and it's just kind of up and to the right. It was a little bit of an active blip. So during, bull market peaks, everybody kind of foams in hypes, and that's probably representative of one of those. But remember, 46 million addresses, not bad. When you compare that to over 8 billion people, that's not a lot. We're still early. And by the way, there are over 60 million millionaires, probably about 64 million millionaires. People say it's 56, but it's actually 64 because I calculate it all the time. And becoming a millionaire is actually easier and easier because dollar's debasing fast. But remember, there are nearly as many Bitcoin addresses, Bitcoin individuals adopting Bitcoin, as there are millionaires, but it's a tiny percentage of the population. Also, there are good people in the world, like Jack Dorsey, despite all the Adani stuff of late. He is now spending his life to grow Bitcoin adoption. That is his only focus. Of course, he's CEO of a company called Square as well, or The Block. But it's good people really pushing this adoption. And remember, the more participants there are, the more valuable the network. Also, the more participants there are, the scarcer this thing will become. Let's look at some Bitcoin scarcity data. Out of the total 19.3 million Bitcoin, only, this is kind of mind-blowing, only 964,000 have been produced since May 2020 halving. May 2020 seems like eons ago, but that's kind of 3 years ago. And you can see 18.3 million were mined between 2009 and 2020. And despite not being too scarce, Bitcoin went from $5 to 30,000 over the past decade. Now it's over 30,500. And the interesting part is scarcity will double in April 2024. So you're dead right, CPK. Scarcity is happening. And it's happening fast. Now, you've seen all these stats before, but I just want to give you a quick summary of where we are today. All right, in today's dollars, global wealth, 900 trillion. 1% of that is 9 trillion. Current Bitcoin market cap is $500 billion or 500 billion. And 1% of global wealth would mean an 18x in Bitcoin price. And the conservative target I have for Bitcoin is 540K. Not sure when, but at the rate at which this thing is getting hard, that could happen way sooner than expected. My original plan for this is about 2028, but who knows? We'll see. I don't want to sound like it's too much hopium, but the things that we've been seeing on chain, especially since late 2022, have just been nothing short of astounding. In addition, quick reminder from the very beginning, where we are, we're right there, that little tiny little dot. And if you take 46 million people that have adopted Bitcoin, divide that by 8 billion, that's technically 0.005625 of the global population. I know certain countries have a lot more adoption than others, but think about that. A lot of people are unbitcoined, let's call it, as we go forward. It's still very early. This thing is so hard. It's incredible. Now, probably the most beautiful picture that CPK, that you get an idea of the hardness, is, again, on the left, you have US M2 money supply from 1960 to 2022 and how it's gone vertical. There is no denying that. 21.3 trillion in money supply. It's probably a little bit higher now. And the Bitcoin supply schedule, I pointed the little green dots between both of where we are respectively. So the one on the left is going to continue going up and to the right. The one on the right is going to flatline. Okay? Supply schedule for the next 100 and whatever years, 120 years, is just going to be flat. So as people come in, the price is guaranteed to go up. And the hardness is doubling. We're seeing, I think it was 78% of people have not sold in 2 years. That'll be 90% soon. So if you imagine 90% of 15 million Bitcoin, 14 million Bitcoin, something about there, that's 1.4 million Bitcoin available for sale. And we're still so early. You combine this chart with the previous chart, it's so exciting, it actually keeps you awake at night. So with that, I don't know where we're going to go. I did expect a smaller drawdown to about 30K last year, and we got there. But then we were hit with Black Swan after Black Swan after Black Swan after Black Swan. It was like a complete poop show. And that's why I think it took us all the way down. There was so many hits. But now we've seen things like the banking crisis and Operation Choke Point and everything else. It really proves the use case. So I do expect less of a drawdown, but there will be a cycle because it's a euphoria. So the market will take the Bitcoin price up to a certain level, and then people will FOMO in, and it'll go higher than it technically should go, and then it'll revert back down. And that's just exactly what happens. So let's go to the next question. Thank you, CPT. This is from Chewie. It's regarding peer-to-peer Bitcoin. James, I've been looking more into ways to get Bitcoin in a decentralized non-KYC methods. By the way, non-KYC is know your customer, so you can have it privately, which seems work P2P, and people pay using Amazon gift cards, so it can't be traced. What I would love is your team to prepare a future video. Bubba, look at decentralized manner, CBDC, dystopian future. But this goes into really digging into Bisq network, and we'll talk more about that right now. And that is, how can people trade Bitcoin peer-to-peer privately? Not advice, of course. But here, there's a couple of ways you can get Bitcoin without KYC. And that is LocalBitcoins, HodlHodl, and Bisq network, which we'll talk about now in a second. Also, Bitcoin ATMs, you can use those. Don't recommend them, but it's possible. And people have gift cards, prepaid debit cards. Sites like Paxful, Bitrefill allow you to trade your gift card for Bitcoin. And then you got Bitcoin meetups, direct peer-to-peer exchanges with people in your area, where you can actually, barter services. One of the things I do believe will happen more and more in the future. It could be peer-to-peer legal services or plumbing services or whatever, chauffeur services, gardening services. And that's just coming. And that's something that just can't be blocked. And then get paid in Bitcoin. You can get part of your check directly in Bitcoin, but of course that would probably be KYC'd. Let's look at Bisq Network real quick and walk through this. So this is kind of a short dive into it. And what makes Bisq unique is that it is a pure peer-to-peer exchange. And by the way, just to make sure people know, this is a question. We have no affiliation with anything. So this is just an objective point of view regarding this. And take it as you may. But what makes is users manually search and select for specific offers they wish to take directly from Bisq users. This enables true peer-to-peer settlement and ensures that users are in control of which counterparties they trade with. And it's important to note as well that Bisq doesn't use a market maker approach. Instead, it simply coordinates the trade. So for example, if I have one Bitcoin available for sale for $30,500 instead of going to Coinbase, I can pop it up here for sale, for example. And trades are executed directly between buyers and sellers, and funds are held in a multi-sig escrow until the trade goes through. That's simple, but there's more to it. So there are some advantages as well. There are no KYC requirements. Bisq does not require users to complete a Know Your Customer process, and this allows users to trade without revealing personal information, which can be a concern for those who value their privacy. And Bisq does not require users to reveal any personal information, no names, no addresses, no nothing. And instead, users are identified by a unique account identifier and a public key. And this protects users' privacy and prevents third-party entities from accessing their personal information. And Bisq is open source platform, and we like open source stuff here. It's completely decentralized. There's no central authority or control over the network, which means that users have complete control over the funds and trading activities. And this is awesome. And I always say the future will be tokenized, the future will be completely decentralized, and that's what we want, because we've seen how central organizations work. And I'm just going to pop out of the chat here and make sure I'm not missing anything from you lovely people. So let's go and let's how to install and create an account. Bisq, you must download and install the Bisq desktop application and create your account. Again, doesn't require any information. Then you need to fund your Bisq wallet before you can trade on Bisq Network. And of course, we always recommend try a little bit first, see how it goes. And if you do a trade, your funds are locked in escrow till everything clears, just like in a traditional bank. So this is just one of many things that's coming in the future. A quick view of what it looks like. Once it's set up and you're ready for trading, you can go over to the trading page, create or find an offer. Offers are listed in decentralized order book, and you can filter them by payment method, by currency. You could pay in British pounds, and other criteria as well. And once you find the offer that matches your requirements, you can open a trade, coordinate with them, pay them, and once the trade is agreed upon, the buyer sends the funds to the escrow account. The seller releases the Bitcoin to the buyer's Bisq wallet. And once the transaction is complete, both parties can leave the feedback on the Bisq network. And that's it. No personal information is exchanged and no intermediary is required. There's no putting this toothpaste back in the tube, as I like to say. So thank you, Chewie, for the great question. Next question is from CraigM. Is there a way to effectively combine DCAS with BTC top and bottom indicator? I'm looking for a long-term investment and not a trader. So my primary strategy is DCA, but will be open to selling the other tops that are indicated and using these funds to add to my allocated DCA funds to maximize both strategies. Great question. So we have, for those who don't know, we've got a number of different indicators that we make available to the community. The top and bottom indicator is designed to identify bottoms and tops and everything else in between, as well as key transition layers. We also have DCAS, which is dollar cost averaging on steroids, and we'll walk through those both right now and see how they work in conjunction with each other. So all tools that we build are building blocks to incorporate different strategies for different users, for different levels of sophistication, to build that whole holistic trading strategy. And before we talk about combining them, let's understand what they are. So DCAS is designed to smash DCA strategies. And it does this by using a whole bunch of mathematical models to make sure that you do not buy when things are frothy, but you buy hard when they are cheap or not frothy, with different multiples that are signified in the actual indicator. And the top and bottom is designed to determine the strength of the Bitcoin bull or bear, when to layer in, when to layer out. And these two models do complement each other, and we'll walk through exactly how that is done right now. So first of all, this is actually a visual of what they look like. Here's an example of how you can use the fundamental analysis you derive from the top and bottom indicator to inform your DCAS strategy. So for example, you got the DCAS calculator at the top. It normally has an indication as to what the load is that you purchase on the triangle. It's not showed here. I forgot to highlight that. And then you got your DCAS model. And when you layer in, how hard you layer in as well is like a visual histogram of how things look, whether the market's frothy or not. And you use the DCS to configure your buy targets. You can configure it to anything you want: weekly, monthly, daily, bi-weekly, $100, whatever, $50, $1,000, whatever you want. And you can see exactly in real time, depending on your settings, which you can also customize, how you would have performed versus DCA. And also at the bottom, you can, while you're doing the DCA stuff, you can actually activate the TABI model at the bottom, and you can see exactly where we are. And then you can draw little lines as to where your buy zone is, and where your buy zone stops, and where it starts again, and where it stops. So that's one way that you can use the top and bottom model to evaluate Bitcoin's fundamental value and per your DCA strategy accordingly. By the way, the DCA model, of course, works for all assets, no matter what you are, whether it's equities or crypto. But the top and bottom is just for Bitcoin. Forgot to mention that. Now let's look at combo number 2. You can look at a more sophisticated strategy. You can combine the trend and layer out into the strategy. So first we'll look at the direction of the trend, and you see how it dials in very closely to the dollar cost average model and the top and bottom model as well. There are times where you pause your DCA, and there are times that you ramp up. And that's exactly what it's supposed to do. And this is based on many of the principles that I have had in my life. I say, don't chase, replace, etc. This prevents you from chasing. It gives you that discipline. So a lot of times we kind of instinctively know what to do, but we need a decision maker to help us. And we do that using numbers and math. The third combo is to identify hedge and profit-taking layers. This is the layer out model at the top, and it identifies the layers based on a whole bunch of different parameters. And from there, you can identify where to identify support layers, where you buy in combination with the DCAS model and the top and bottom model. And you can see, actually, this is the first time I've looked at these all in conjunction, but they actually do visually complement each other as well. And if the market is becoming too frothy, as we say, according to the top and bottom indicator, we can flip on our layer out levels to identify potential exit points for Bitcoin. I like to get in, for example, at layers, and I like to get out at layers. Remember, I can do another complete model on video on this as well if you like, but typically I like to exit stuff in fifths, like 20% tranches all the way up. By the time you get to the top, you've got a lot of profit, but you have still some of the table's money riding as well, which is important. So thank you for that question. This is another interesting question from OP-Nico. OP-Nico found out something very interesting. He was comparing Solana to Ethereum. The number of, let me make sure it's okay. The number of OK daily active users are decreasing from on-chain metrics, and also the number of daily addresses is usually roughly half the number of daily active addresses. For ETH, it's usually 1/5 or 1/4. Well, let's test that. Now the question is, does that mean that Sol has less user retention than ETH? Brilliant question. So first of all, let's look at the ETH daily active users, 7-day moving average, versus the 7-day move average of new users. So you can see here on the left, approximately 471,000 daily active addresses. By the way, this is also very different to how it was a month ago. Thank you so much, T&D Tesla. But a month ago, it was a lot less. It was about 350,000 daily active users. But it's gone up a lot because of course, Shapella and the hard fork brought a lot of activity to the chain. Also, the number of new addresses for Ethereum network, which is already stable, you can see here it's around 80,000. So per what you said, OP-Nico, 471, 80,000, that's about a fifth. Actually, it's less than a fifth, more like almost a sixth. This is Solana daily active users. You see, it's gone through a bit of a slump. We did have a spike a couple of weeks ago where the daily active users were higher than both Ethereum and Matic, which is impressive to see. But what is interesting here is the number of new addresses on the Solana network. 7-day moving average is over 115,000 compared to the daily active users of about 235,000. So what is going on? And what is the explanation for this? Well, first of all, we know that the daily active users is about to explode because of all the DPIN activity that's happening on Solana. But this is my simple explanation. And this is the numbers of the 7-day moving average. Currently, as of today, Ethereum, 470,000 daily active users, Sol 235K. Remember, a couple of weeks ago, it was the opposite. New addresses, 81K for ETH, Sol 116K. So that is exactly 17.23% new addresses versus daily active users. And Sol had nearly half, 49.36%. And I think Lindy is the reason for this. And in other words, the Lindy effect is the longer something has been in existence, the more people are kind of have a tendency to go there. So for example, if a cryptocurrency has been in existence for a long time, like 9 years or something, like is the case with Ethereum, it is more likely to have established, long, strong network of users, etc. This is what you're seeing here. And this in turn makes it more resilient to market fluctuations and less likely to disappear altogether. That's the Lindy effect. Now, Sol is still a relatively new chain. 2 years ago, those, when I first started talking about Sol in March 2021, there's nothing on there. There's no dApps, no nothing. But we do expect Sol to grow real fast. And I would much prefer a higher ratio. Let me pop this ratio again. I'd rather be 49.36 versus 17.23 because every chain depends on its lifeblood. But your question is super interesting. And Nico, that's why I love doing these, because I learn from your questions. It makes me dig. But we'll see how this trend continues, and we can try add it into some of the metrics we use as well as we go forward and see how the performance of this metric drives future growth expectations for a chain. Fascinating idea. Let's look at the next question. This is from Fyvieloon. Can you have a look at the NASDAQ-listed TeraWULF, the first US-based Bitcoin miner using nuclear power for energy? They tweeted, "We continue to execute as promised, delivering strong results in Q1 2023. We believe the continued hard work and commitment of our people has positioned us to achieve our goal of 5.5 exahash of capacity in the second quarter." Wow, that's big growth because they've come from nothing to something real fast. And I do my miner review. It's typically 8 miners, the top 8 public miners. When I do it next week, because a lot of people were upset last week I didn't because the miners went nuts, like CleanSpark. I went from $2 to $4 in like a couple of days, 70% gain in 3 days, which is insane. But let's talk about the WULF hash rate. And here you can see per this chart these are monthly statistics starting in January 2022, and they had nothing going on. They didn't really start until March, which is exactly a year. But they've gone from nothing to nearly 3,300 terahash, which is very impressive growth. And if they're going to 5.5 in the next 10 weeks, really impressive. That is a very, very fast growth. Next, let's look at the amount that they mine per month. Again, this is stunning because they've gone from, mining 30, 40 Bitcoin to nearly 250 Bitcoin a month. And to put things in perspective, Hut 8 only mined 131 Bitcoin last month. These guys are doing nearly double that, and they just came out of the blue. So it's very, very impressive. Let's look at the balance sheet. A big part here is the debt, 130 million in debt, and equity. So we have to examine their current burn to identify how long they can survive. Here we look at the kind of earnings. You can see they're losing ballpark 150 million a year. So you go back to this chart, that would wipe them out pretty quick. And that is the concern as we go forward with these types of names. In addition, when I calculated dilution's 80% over the last 12 months, which is extremely high. And a lot of the miners are diluting, of course, to raise money to buy rigs, and that explains their scale. But to do a really deep dive, it takes hours and hours and hours of number crunching. But what I can show you is this, and I will include them next week in my deep dive. But here you can see there's one concern on these numbers when you compare them to the peers, and that's price to sales, extremely high. I know they're ramping up, so I need to look at exactly how much they're burning, how long it takes them to ramp up, etc., what their profitability looks like, their capital efficiency, and see how they compare to others. But right now, when I look at these numbers, they nearly have the same market cap as CleanSpark. CleanSpark is double the hash, double the Bitcoin production, way more scale, effectiveness, efficiency, and the valuation is just off. So I can tell you right now, just by looking at these numbers, items like CleanSpark are a better value with more upside. But it's so funny because CleanSpark was $2. My target was like 12. So if you buy at $2 a couple of days ago, in fact, it was a 6x. Now it's at $4. It's only a 3x. And this is the kind of power of exponentiality and the importance as well. The investing lesson here is to get in early. Okay, a couple of days can be the difference between a 3x and a 6x in your investment. So remember that. So I will be doing, well, let me know in the comments below, because I know people do some miners, boring. Nobody's interested in looking at financials for miners. But if you can time it right, wow, it's incredible. Bitcoin was flat all last week, and CleanSpark went up 70%. So riddle me that. And is Wolf the next CleanSpark? We'll answer that too. So let me know if you want that video. Next question is from Tarnished, and this is, I am 37 and will inherit 550,000 British pounds. I think that's about $620,000. Tarnished would put half into Bitcoin, half into Tesla, but my wife would pay off a £280,000 mortgage, call that half of the inheritance, which frees up £1,000 a month for Bitcoin, and produce Spanish real estate for Airbnb with the rest. We would like to retire by 50 due to similar circumstances to you. Which strategy would you help us achieve this? So this, yeah, I love these questions, but I shouldn't really answer them. But all I can do is say what I would do. Now, typically within a household, females, and don't take this wrong, any females out there, they tend to be very, very conservative, very risk averse. And that's why in most cultures in the world, women handle the finances because they do a better job than men. But this is also a special time to be alive. So, and my what I call rule number one, fiat is debasing. Let me just show you this. That's what I mean. This chart one more time. Remember this? All right. Do you want to hold that when it's being printed to infinity? No, not at all. So rule number one, and again, I got to be careful here. I personally don't like paying off debt. If I can get debt, lock it in a very low fixed interest rate, and pay no principal back, that's what I do, and I've been doing it for decades because I know where fiat is going. It's going down. If I borrow $1 million at 3% interest only, no repayments, I know I'm only paying $560K back in 10 years. So I save $440,000 at least, and that's before crazy money printing like now. So hold on to your debt, especially in this rapidly depreciating, debasing currency. And the same thing goes to the British pound. You saw what the Bank of England did in Q4 last year. And avoid paying it off as long as you're able to keep up with the payments. Remember as well, I don't know what the rules are in the UK, But if you miss a payment, sometimes they can rejigger your interest rates. If you miss a payment on a credit card, they can jack your interest. So make sure you always have enough money to keep your credit tidy and make your payments. Very important. Next, my game plan, so I can make everybody happy in this family, your wife and you. I would go thirds. And part of the random reason I like thirds is because of financing and allocations, etc. So you always hear me talking about 3 legs of a stool and things in thirds, layering out in fifths, etc. But to keep the happy family, 185K into Bitcoin, 185K into Tesla, and 185K into your Spanish rental. Do not pay off the mortgage. All right? Borrow as you can. Now, the reason for this is if you take your £1,000 a month and you're DCAing from paying off that £280,000, the Bitcoin price is going to go up. And £1,000 will buy you less and less Bitcoin over time. That's why you want to get in early. It seems to be a theme today. Get in early, get in hard. Even though it might seem crazy now, a $30,000 Bitcoin, we all know it's going to 100K. And after that, 250K. After that, 450K. After that, over time. It's scarce and it's getting adopted. The only way is to go up. And fiat's going down. So it's like it's got one rocket booster on one side and another rocket boost on the other side. It's going to drive the price up. And that's just the math. Now, I also like the thirds too. So imagine the 1% chance that Bitcoin blows up. You'll still have your Tesla. That'll do very well. Okay? Or if Tesla blows up, you'll still have your Bitcoin. But it's highly, highly, highly unlikely that they'll both blow up. Okay? And then have your 185K, which should get a nice place. And by the way, if you're looking at Airbnb, make sure your rent that you can get covers your expenses, because you don't want this eating into your lifestyle in the UK too. So sometimes you can buy a duplex, have 2 units, keep one for yourself as well, and rent both out, whatever. Anyway, enough of that. Thank you for the question. Next question is from Lime Street Music. Can you run Constellation DAG through your crypto compendium? From the research I've done, it looks like it could be a potential game changer and has a lot of projects with real-world utility working with them, including the US Air Force. Would love to hear your thoughts. No shills, just curious, as I appreciate your strict rules of investing. Yes, so I, in full disclosure, didn't know anything about the Air Force deal, don't know anything about Constellation DAG, looked at it a long time ago, never revisited it since. And a quick recap for those who may not know, it's a DAG, which is a directed acyclic graph architecture for consensus and the so-called infinite scalability. And it's been around since 2017, and it's what I would call kind of a data management category infrastructure type play, like Filecoin and others. So let's look. And this, I hate doing this because like there's 18 in this category of what we categorize as data management plays. And this is the worst from a tokenomics perspective. It doesn't mean it won't go up or down, but it is crap in terms of tokenomics. Everything about it is really bad. So I'm sorry to give you that grief news. The other 17 are there. This is ranked the worst. The crypto compendium score is 2.3 out of 10. So it's in the bottom 23rd percentile of the top 500 cryptos. It's also up against names, although they play kind of differently, but like think of like Graph or Chainlink or Flux, all have far, far, far better scores than this one. So I hate doing that. Let's look at the chart and see what the chart looks like. This is the DAG chart you can see here. Wow, it was really high and then just fell. We are now deep under the 200-day moving average in percentage terms. And that is also not good. By the way, what you're also seeing here is another indicator we have, and it's never actually thrown a buy on this particular asset, which is good, or sell. So sorry for that. And, sometimes I always consider it's like, this is somebody's baby and you're telling them the tokenomics are really awful and there may be no hope. But what we do is we use like 69 data points to benchmark cryptos against each other by category. And it has worked very well 92% of the time. Maybe there's an 8% chance that this will be saved by the US Air Force, but I doubt it. I remember 2 years ago, there was a whole bunch of people saying, oh, these guys cut a deal with Pacific Gas and Electric and everything else, and they're working with all these different companies. And it's like, no, it doesn't mean anything. You need adoption, not necessarily kind of private deal. So with that, be careful. Next question, another compendium one. This is from ASLK FJA. Let's just call them that. Can we get an update on the latest crypto compendium scores for Elrond? It says, this is an interesting one because I've been looking at this and looking at this and looking at this for years and years and years because everybody was saying, oh, Elrond. But now they've called it MultiverseX. Could there be a dumber name for something like MultiverseX as opposed to Multiverse Z or Y or A? Anyway, it's always a bad sign when companies try and get rid of their brand name, because everybody knew Elrond for many, many years, and then they switch the names to something like Metaverse. Let's jump on the Metaverse bandwagon and call it Multiverse, because that's going to make the whole protocol much better. Sorry to be firm again, but all I do is share data. Let's look at their score. So first of all, the crypto compendium score is 6.45. 2 years ago it was 6.5. So it's gotten slightly worse, which isn't that bad. This one, in comparison to the previous one, is kind of in the top 2/3 of the top 500 cryptos. Not catastrophic. Let's look at, because it is an SCP, a smart contract platform, it does have an SCP compendium score as well. And here you can see it is at the very bottom. It's just above Luna Classic. Okay, so again, I hate this. It's second worst out of 28 smart contract platforms, which includes all layer 1s, all layer 2s. Some of the data here as well, if you look at kind of the developer activity, it's not good as well. So let's look at the Elrond chart. Not too dissimilar from the previous chart, but at least it's at the 200-day moving average, which is at least something. It still has a lot of people holding onto it and writing very good ink about it, but the problems that I see with Elrond, it has 14,000 daily active users, which isn't a lot compared to other names. Very poor growth opportunity, very poor tech score, very poor adoption, and an abysmal developer ratios all across active commits, repos, number of active developers, the complete drop off in growth. So I hate giving this bad news, but Elrond is, again, out of 28 SCPs, it's second last, just above Luna. So be careful out there. And yeah, I wish somebody would ask better ones. I hate disappointing people. Anyway, Lucky Dragon. If you're forced to only have one leg to your stool, which would it be? I predict you would take real estate and give up on stocks and crypto. From Lucky Dragon. So for those of you who don't know, I believe in a three-legged stool: real estate, equities, and crypto. And within those, obviously, real estate's buy and hold, generate cash flow, etc. Equities, some of them are what I call HODL bag. 80% is to put them away, Tesla stock, etc. is my biggest position. And then I trade about 20% very aggressively. So if I lose my trading bag, and I actually use my HODL bag to support my trading bag in margin to create, additional returns. And my third leg of the stool is crypto. Again, part trading, a lot of swapping between cryptos. I much prefer option trading on equities because I find it much easier. So the answer may surprise you, but if I had one leg of my stool, by a long shot it'd be equities. They are very predictable. They are optionable. Vast majority of my wealth, 90+% of my wealth has come from equity trading. And I find equities more predictable than crypto, even though crypto's on-chain analytics, I find them just much easier to trade. So hope that helps. And our contributions this week, there is we've done this once before, the Vaquita Porpoises. A member asked us to look into it. And there was a recent news release this week. Mexico's environmental department promised to do more to protect the endangered Vaquita marina porpoise Thursday to head off trade sanctions by the International Wildlife Board. But a lot of people on the ground feel that the Mexican government is doing nothing to control what they call gill net fishing, which traps and kills the vaquita. And this is the most scarce mammal on Earth. There's only 20 of them left. So we're helping them. So I'm going to do a couple of quick questions. Thank you all for being here. If there are any in the chat, or if T&D saw any coming in, let me see. Sorry, there's nobody here today to help me. Normally I've got help on. Joy left. Yeah, that's really sad. Peter Lipscomb, with so many large high-scale projects being launched on Solana, any chance you could share your thoughts on some of them, such as HiveMapper and Helium, which have utility? I think HiveMapper is very, very interesting, typical IoT project. Helium's been around a long time. I don't know if this will really help growth, but it may cut costs. That'll help the miners generate money again. Helium miners, sometimes we have a number of members in the community that have 20 plus mining rigs, and they used to make a lot of money, but they're not making as much today because of adoption. But the people that do make money with these Helium miners are those that are in very concentrated areas that need Wi-Fi, very sophisticated places like Manhattan and stuff. That tends to work. But I think I'm much more interested in Render. I think Render will be a game changer on the platform. But apart from that, the amount of chains moving to use Solana as infrastructure is interesting from two perspectives. One, it's going to completely explode the transactions and daily active users. And number two, it shows you why would huge chains that have a lot of responsibility move to something that everybody says is broken? Riddle me that. So if they have trust in it, why shouldn't others? And I know they've been through a hard time, and they had a recent outage a few months ago that was terrible from a small little niggly thing that shouldn't have caused it. But they are working on Jump, I think it is, which will be a fully backup replicatable site that will help things as go forward. So I can do a deep dive into that more as well. Render was using Render before it got huge, very powerful and useful for rendering. It is indeed. I'm not a gamer, but I've seen a little bit as to how it works. Ocean Protocol. Yeah, I looked at that. I'm afraid it does not score well on our things as well. Farafin, can we see the compendium list anywhere? Is it for subscribers only? We're trying to open it up to the community. The problem is it costs, as it has a ton of data feeds. Those APIs cost thousands and thousands of dollars every month. We also have a development team that manages it every single day. So the overhead for this thing is a beast. Think 6 digits. But we're trying to help people, give them access to what they're looking for. So imagine you own token X and you want to see how it compares in its category to other names. You'll be able to pay like $1. We just want to try get to a position where we can cover the overhead. We don't want to make profits from any of this stuff. Just cover the overhead on it and help people understand where their token goes. Because there was a recent video just a few hours ago, somebody saying the top 8 cryptos of 2023. Every single one had horrible compendium scores. Horrible. And they were also last in their categories. So that will help, bring much more transparency to the space from a quant perspective. Things that would take an individual maybe 100, 200, 300 hours of research to get to the same level of knowledge, they'd be able to see it in a flash. So they determine if their crypto is going to make it or not. And that's what we want to do. So that's the plan. Yeah, Fairfin, it's a lot of cash, a lot of development time. But remember, it has 69 different data points. It's got about 25 different APIs. Some of these APIs are like $1,500 a month. And then development teams to support. So it is expensive. So, but it's also important. And we think it'll be very helpful to the community. We're just trying to find a way to get it to you all. So now that it's built. Let me see if there's any more questions. And then I'm going to go faint signals. Watch C, Spira C, and to see how you can help wildlife. Awesome, we'll do. Epic Cash is the third. No, I don't know. I've never heard of Epic Cash. Oh, yeah. I can do that. Aristotle or Plato? Good question. When is James going to interview T&D Tesla like he did with Dr. Sanjay? T&D, if you're open for it, I'd love to. And T&D is amazing. And that'd be cool. Or we could do a round of golf somewhere like Hawaii. That'd be even better. Hello from Norway. Good question. When do you sleep? Yeah, I have had problems with that lately, but it's also an exciting time. So this year has been very, very exciting. So you're energized by all of the activity and things coming around. Let me see. Hey, Benny. Hey, Rusty Bot, Cat M, all the usual crew. That does not bode well. Yeah, and Cat M, the issue with assets, I covered it. I just want to spend a minute. I did a very detailed video yesterday, which was extremely well received. Every single comment is like mind blown. Everybody got something from it. So I'll add it here. Check out yesterday's video regarding how to have crack the code on the investor mindset that you need to have. But if you take crypto, there's like 25,000 cryptos now, okay? The analog, early 1900s in the US, car makers, there was 2,000. Now there's 3, okay? So there's only room for a few players. Well, there's 3 plus Tesla, but I don't consider a Tesla a car maker. So over time, everything gets eaten up by what I call black holes. They are the winners. There will not be 28 layer 1s winning, okay? Maybe 2 or 3. That's why I focus very hard on very, very few names, because the more you scatter your money across different elements of a category, the more you're going to lose. And that's also mathematically provable. Mr. Andy, thank you so much. I'm going to do one more question, and then I think my voice is going to stop. Let me see. Adam Quarterman would love a video on your end-to-end analysis of an equity before you decide to invest. I've done one. Check out my Investing 101 playlist. I did one from the very beginning to the very end. And I think I used Tesla as a case study because that's what I did years and years ago. And that'll be it. So what did MC13 say? Is MC13 mad cow? Make sure you hit the like. Yes, thank you so much. Assuming that's MC. And I'll do one more question because I can't get away. I can't be quiet. Jason Fantlip, do I still believe in Solana? Yeah. I mean, so again, I chose it because I have big Bitcoin position, big ETH position. I bought pretty much 95% of my ETH all in the space of a week back in March 2020. I was watching it for a long time, and it's like, wow, this is so cheap. I run into the burning building. So now I've got a very low cost basis, but I was worried about that segment of my assets. So I had to find the ETH killer that everybody's talking about. And I researched day and night for months and months and months, found Solana. I said, if anybody's going to dethrone them, it'll be this. It's a different architecture, different approach to technology. And that's it. So I still have, right now, my ETH position is 16% of my crypto. My Solana is about 5%. There was a time when it was higher than that. But of course, Ethereum has moved. Solana hasn't, but that's what happens. So Bitcoin moves first. Ethereum moves second. And then the smaller ones move last. But remember, Solana market cap was 3% of ETH the other day. 3%. So the question is Ethereum 34 times better than Solana? And Solana does way more transactions, had more daily active users a week or two ago, and has more breadth of dApps, more flexibility. And the people that are on the Solana platform transact an awful lot more. And that can be seen in the data too. So will it make it? Yes. They're also doing things that are very unique, like mobile, super interesting. DPIN, super interesting. So totally believe. And I bought probably 50 times more Solana over this bear market, maybe even more than that, than I have Ethereum. So that's where I'm placing my bet, because I want my Ethereum bag and my Solana bag to be equivalent. That's my goal. And if Solana goes to where I think it's going to go, there is technically a feasibility that it could even be bigger than my Bitcoin bag down the line. So enjoy your Sunday, everybody. Thoughts on Star Atlas. Every single thing that it is very ambitious. And the only thing I'll say about Star Atlas, if they can pull it off and if they get adoption, it could be mind-blowing. But the tokenomics are horrible. Okay. Thank you so much, everybody, for being here. Thank you so much, T&D Tesla. Ping the inbox if you would like to be interviewed. I think that would be fun. And I do what the community wants every single time. So let me try to find out where my screen is. All right. Thank you, everybody. Hit the like on the way out the door. Much appreciated. I'll see you all tomorrow. Bye.